Hello, this is Ron Brown. I have completed updating some of Gil's files that are used in HGS Investor, and I'm going to show you how to get those files and what the files do. Now, uh, these methods, or the methodology, is taken from his OWL handbook, which stands for O'Neill, Wyckoff, and Livermore. And these traders were all tape readers essentially, and they watch the action of the market to determine what they thought a stock was doing or was going to do. So Gill's strategies are built around these, and he put them in this handbook for his subscribers called the OWL Handbook. Now I'm going to scroll down here and show you the table of contents. He takes you through a review of the O'Neill disciple setups, and he discusses pocket pivots, continuation pocket pivots, Bible gap ups or BGUs, 5-day pocket pivots, voodoo or volume dry up pullbacks, bottom fishing pocket pivots, bottom fishing Bible gap ups, and undercut and rally. Now I have uh, created scans to the best of my ability to utilize these techniques, and that's what I'm going to get into. That's all I'm going to say about this OWL handbook. Those of you who are subscribers should already have the handbook. Now, I'm in HGS Investor, and you can see that I have just a base version of it here with the HGSI starters, and that's it. I have deleted everything else because I want to show you what a clean install will look like. So what I'm going to do is go to the menu, and you have to have the software installed, and then once you do, go to the help file and move on down here to add-ons, and that will open up an HTML page on the HGSI server, and these are the add-ons. Here are the instructions, but if you watch this video, you don't have to read the instructions. Now, these are some of my older files. They're not current, but it's just something to get you started. These are Gil's current files. Now, you don't have to be a member of his, but if you want the handbook and really want to study it, you are going to have to join. But I'm going to open this up, click on the plus key, and notice the download zip file. You can see that I'm the source of these, so you can contact me. But I'm going to click on download zip. This opens up a window directly to my downloads folder. I already have the file in here. I'm going to overwrite it. And then when it's done, this pops up. And now I have to go to my preferences menu. And I will go to install add-ons. And I will locate this. It's in my downloads folder. Make sure you know where you download the file. Click on that. It's a zip file which contains everything you need. I'm going down here to the lower right corner, and I'm clicking on open. It says they've been installed, and I'm going to overwrite anything that's in there, but there's nothing in there because I have deleted everything. So what does this give me? It gives me Gil's current files. Now, you can see they've been added. Now, if you have a bunch of Gil's older files or my old version, just delete those and make sure you're using Gil Morales end of day and intraday scans. That's what the folder is going to say. Okay, I'm going to expand this. Now these views right here, views are scans. These are all scans, warehouse views with filters and combo rankings attached to them. These are the original ones or these were in the original files which you're replacing with these new files. So everything you had before is in here. I tweaked a couple of these filters just to make them work a little bit better, but what I'm going to concentrate on are the OWL handbook scans, and also I may take a quick look at these intraday scans to show you how useful they are. But these are the scans that are in the handbook. I'm going to start here with the 10-day pocket pivot. This is one of Gil's original scans. I'm going to bring up a chart. This is end of day. This is a weekly chart. I'm just going to go up to his basic fat chart. Fat means the fat bars are being used, and I'm going to open up another chart, and this is a window chart. Now I stuck in just a plain week or a weekly chart, which is not semi-log. I don't use semi-log. Gil likes to use semi-log for some things, but I just stuck a regular weekly chart in here for my own use. So these are the charts that are available. I also stuck a fat 3618 crossover in here because a lot of my scans use a 36 crossover as a potential trigger, and this often works very well with the pocket pivots. So I just stuck one single chart in here. This is not a chart that Gil uses, but that's my chart. So maybe I should have put my name on it, but that's all right. So let's start with this setup here. I'm going to go back to here, go to a weekly chart, and stay with the pocket pivot. Now this pocket pivot, the combo rank, for those of you who are not familiar with how this program is put together, we have a filter and a combo rank. The filter filters out everything that is not relevant to what we want. If I open up the filter and click on it, it shows that you can have some choices. This is something I did different that I haven't done before. A lot of people like ETFs rather than common stocks or both. I'm giving you the option of selecting just common stocks, or if you want ETFs in the scan too, you can just change this to a yes. There we go. The arrow wasn't showing up, so I had to redo it. So you can just, if you want to scan for both, you can put a yes in here. If you just want ETFs, you can put a no in here. So that is something that you might like to try. I'm going to just leave it on stocks only for now. But these are stocks that are at least $11 trading 700,000 share or 7 million shares on the average dollar volume. Relative strength rank, we used to have 80 in there, but I just put it to 0. You can change that if you want to. These files are really not going to be updated very often, so you can just change that to whatever you want for relative strength. And the reason I did that is because a lot of these stocks that are moving are coming off the bottom and they have low relative strength. So that's up to you. But this is easy to change. If I click on preview now, there's 92. If I make this, if I make this 80, cuts it down to 47. But I'm just going to leave it at 0 for now. And you can do whatever you want on there. The change has to be greater than or equal to 0. And here is the formula really for the original pocket pivots. So you have to, the close has to be within 10% of the 10-day moving average. Less than or equal to 8% and greater than or equal to minus 2% below the 10 days. So what you're looking for are stocks that are within that range. The percent volume compared to the previous 10-day down volume right here, this is what generates the pocket pivot. So the percentage of the volume is greater than any previous volume on a down day, if that makes sense, and then above the 200-day moving average. So I'll just leave it at that, and then the combo rank is just a standard I've used for a long time. It's got both pocket pivots in here and the force index and so on. And it just brings the best stocks to the top of the list based upon that as far as the criteria. Now notice let me bring that back up here, sort on roll combo. Seagate, notice the EPS rank is only 1, yet it's at the top of the list because I really didn't factor that into it. Here's the relative strength in the group rank for an ERG, which is a total of these three, of 183. So I've found over the years that EPS rank is not really a big factor when it comes to finding stocks that are on the move. For example, look at Domino's Pizza here, DPZ. RS of 86, group rank of 93, but EPS of 55, and yet look at the stock as I bring it up here. It's a $500 stock almost with an EPS rank, a low EPS rank. So I don't pay much attention to that anymore. I mean, it's great when you can find a stock that has all three factors and a high ERG that's trading a lot of shares. Let's look at SPLK. Wow, it's a buyout. Sorry about that. By the way, these buyouts, when you see charts like this, just don't worry about it, because as soon as they quit trading, their buyouts, they are automatically eliminated from the database. You can't really screen them out because there's still a little movement in them. If they were just flatlining, yeah, I could screen them out. But when they're like this, just don't worry about it. Okay, let's see if I can find a high ERG stock. Harpoon Therapeutics. Don't know anything about it, but it's got a high RS and a high EPS, so it's another buyout. See that? It's bought out for a reason. Let's do another one. There's another one. So, this one I know is not one because I've been trading this one on and off. But here it has a high ERG. But if we go back and sort on that raw combo, this drops down to number 51 because the combo is driving it in the short term. Okay, moving on. I kind of got sidetracked there, but I'm going to leave that in there because I think that's all relevant information. Now, this is a 10-day pocket pivot. I'm going to do get an arrow up here and show you the pocket pivots, or these blue bars for the positive and the rose bars for the negative. And it's that formula that I talked about, up volumes greater than any percentage down volume over the last 10 days. I hope I said that right. You can see a big volume spike here. You can see one here. These are all pocket pivots. Now there can be a red bar here with a blue bar because I'm showing both 5 and 10-day pocket pivots along this or in the chart. Just to make it easier, I'll show you that. In the chart, I'm going to edit the indicator. Let's move this up here. Had to get my recorder out of the way. Edit the indicator, and I need to go back down here. Edit the indicator, and I'm going to code blue the filter. So this is called a visual filter back test, and what it does, if either of these conditions are true, both the 5 and 10-day pocket pivot and the percentage price change one day is equal to or greater than 0, then a blue bar is going to be generated. So it won't be just a 10-day pocket pivot, it'll be both. And the reason it doesn't matter is because we have both pocket pivots, both 5 and 10-day in the program. But let's take a look at this. This is Fiat Aviation. You can see that this is 327. Yes, that is today. So these are the current quotes updated every 10 minutes. You can see that the bar is coming down. But let's go up here where I'm kind of getting away from what I want to do. I want to talk about a pocket pivot screen from yesterday. Let's look at psychokinetics. You can see right here this blue bar yesterday. Here is today's bar. It's hard to see, but it's there. but you can see volume is way down, but it's low. But this is the pocket pivot from yesterday, and that's what this scan is based upon. I'm looking at yesterday's pocket pivots. Now, these stocks that's yesterday's news. I want to know what's going on today. So what I do is I don't do a lot of prospecting at night anymore. I do look at some stocks early in the morning. I'm a morning person, but if I want to know what's happening today, I just go to the 10-day pocket pivots intraday. Both the 10-day pocket pivot and the intraday use the same filter. If you look up here, there's 92 stocks. End of day, there's 92 stocks. So it's the same filter, but this is what's happening with these stocks the following day with the pocket pivots. So Buford Capital is at the top of the list based upon this combo ranking, which measures the intraday volume, the intraday price change, and the intraday range all weighted equally, and that brings these stocks to the top of the list. So if I bring this up, which I just did, you can see that it's up 2.51% today on the intraday, trading near the top of this range, and it's trading above the volume. Now here it is right here. You can see that same information is here in the box. If I'll bring an arrow up here. If I look down here, you can see here's yesterday's pocket pivot, and there's another one being generated today. So the intraday, it's above average volume, and it's trading more than any day that had down volume over the past 5 or 10 days. So you're getting real-time pocket pivots here on the chart. You can't really scan for retail or real pocket pivots intraday unless you do a complete update, and that takes a little bit of time. So I just don't bother. But here are all the pocket pivots. Now let's go back to this day right here. I'll put a crosshair on. Notice there was a pocket pivot this day. So this stock came up through this screen back on this date. If you look over here to the lower left corner, that was the 14th of March. The pocket pivot took off, and as we go up and look at these indicators up here, you can see that the Bongo Weekly is turning positive today. That's a long-term internal relative strength. The short-term Bongo turned positive on this pocket pivot day here, and the force indexes both turned positive on this pocket pivot day here. And the force index, today's close minus yesterday's close, times today's volume. And this is averaged out over 2 days on the 2-day force and 13 days on the 13-day force. If you look closely, I'll bring this down, you can see a light green line here above the 0 line, which shows you the force. And then on the 13-day, you can see a histogram. When there's a big move here, like here, let's see how the histogram pops up like that. Big move, but that didn't go any further than that. So when you're scanning for end of day, that's yesterday's news. That's why I like to look at the intraday to see what's happening today. Now let's look at that filter one more time, and this is the original pocket pivot filter. Remember, these have to be within the parameters of percent close to the 10-day, less than 8% above, and more than minus 2% below. And the key right here is this pocket pivot formula, percent volume greater than the previous 10-day down volume. So you're looking for stocks that are not too extended from that 10-day moving average on this original pocket pivot scan. Okay, now I'm going to go down to the next one. It's a continuation pocket pivot. I have both the end of day and the intraday. And what do I mean by continuation? Well, this is the filter. The way I'm looking at it, it may be a little different than what Gil looks for, but he's such a visual person. He can just look at these charts. He's been doing it for so long that he doesn't really even need to scan a lot. He just flips through a bunch of charts. But for those who do not have that ability and want to know when a pocket pivot's going off, this is a good way to do it. So in the continuation, everything's pretty much the same. It still has to be within the parameter of these extensions above and below the moving average, and here is your pocket pivot. But these have to be above the 200 and above the 10 and above the 50-day moving averages, greater than 0 on all of these. So if these conditions are met, and once again I see that I have the ETF selected also. I'm going to close that, reopen it. Probably because I'm recording the video, it doesn't pop up right away. Okay, I'm going to change that to no. And it cut it down from 111 to 79 because both were in here, or both were being scanned, both stocks and ETFs. So now I just have it on stocks. And once again, this is the end of day. That's Seagate, and these stocks all qualify for this filter. But let's do the intraday. The intraday is going to eliminate any of those buyout stocks because they're not going to be at the top of the list. They're not going to be trading. There's that Buford Capital, which qualifies as an original pocket pivot, but it also qualifies as a continuation because it's above those moving averages. Let's take a look at Methanex here. Now this stock is really in a downtrend, or it's flat, it's consolidating, but it still qualifies as a continuation because there's original pocket pivots here, and then these pocket pivots are continuing because there are pocket pivots and it's above the moving averages that are in the filter. You can see it's above all of those, but you're looking at the chart, you can see that it's really not going anywhere yet, but it's still meeting the continuation. Now this is a much better example of a stock that the original pocket pivots went off back here, and it's still within 8% of the 10-period moving average, or let's as of last night's close. I'm going to bring the alternate A, the annotation tools up. They popped up here. I'm just going to get a line here. Let's see. Let's go from the 10-period moving average up to the close. And if you look down here, I'll highlight this. This is only extended 3.9% from the 10-period moving average. That's why it's still coming up. Now, if this were in a climax run and we're well above that, it wouldn't show up as a continuation pocket pivot. But all of these are continuation pocket pivots because above the moving average and trending up very nicely. Let's get this out of the way and see. Look at it on a weekly chart here. Huge move on the weekly charts. Volume coming in, confirming volume. But these are all pocket pivots. Now let's take a look at this. The date was 2/8. And if I go over here with a crosshair, here's a week of 2/9 right here. So you can see the weekly bar here where it was taking off. But the pocket pivots came in here. It would have shown up well within the parameters of the less than 8% extension from the 10-period moving average, and this would have shown up in the original pocket pivots and also probably in this continuation pocket pivot. So if you look for these pocket pivots and consider taking them, look up here at the top to see what the bongos are doing, and see what especially what the Force 2 and 13 are doing. And this is going to be a big move because of the volume. They're going to turn positive too. and they stayed positive all the way until, well, the 2 turned down here along with this red bar here, and then both of them turned positive again on this move up here. So these indicators work pretty well. And why do they work well? Because just like the pocket pivots are based upon price and volume movements, the force indexes. These are relative strength, short-term and longer-term relative strength indicators. But for in and out, the pocket pivots are a good way to get into a stock along with the force indexes. Okay, let's move on. Bible gap up. You all know what a Bible gap up. Yesterday there were only 2. Now Krispy Kreme, here was your Bible gap up, but look what has happened to it today. Profit taking. They announced yesterday that they're going to be selling Krispy Kreme donuts at McDonald's stores all around the world. So huge pop up, but you have to be careful about these gaps because this can happen. They can pull back on short-term profit taking, pull back very quickly. Here's the weekly chart. It's sloppy, big moves all around. So this is the Bible gap up yesterday. That one, percentage price change up, was at the top. So let's look at this one. Bible gap up, pullback. So this is why I don't spend a lot of time looking at the end of day, because I can go in here and yesterday's Bible gap up is my next scan in here. It's using these same 10. Now this one does not have a quote from Thinkorswim, but you can see which Bible gaps followed through and which ones didn't. Krispy Kreme down 12.28 percentage-wise. Semtech, here's a Bible gap up yesterday, and it followed through. So it's best to see what they're doing the following day. And another thing I decided to put in here is today's Bible gaps up intraday. It's just using current data and with a filter, and it's showing which stocks are gapping up today. Now let's go back to yesterday's. Semtech is in here, and it's also in today's Bible gap up. Well, it's in here. I thought I saw it. There it is right there. So it's following through, but all of these others are gapping up today, and you can see how they're holding up during the day by where they're trading in the intraday range. Now, I'm not going to spend a lot of time on this. This is a 5-day pocket pivot. It's like the 10-day, but it's based upon looking back the last 5 days rather than 10 days. And you're going to get a lot of the same stocks. Let's see this. I've got both ETFs in here. I'm going to get rid of this. You can change these on your filters if you want to scan for both. I just thought that would be nice to have because a lot of you like to use ETFs only or scan on both of them. So it's just a nice switch to have. So this is a 5-day pocket pivot, and this is yesterday's. You can see right here the blue line on the 5-day pocket pivot. Pretty much the same as a 10-day, just a shorter time period. Now here's a 10-day pocket pivot bottom fish. And let's take a quick look at that filter. I've got both of these in here again. You're going to have to turn these off because I left them on most of them. Okay, the bottom fish, I use the percent close below the percent close the 10 and below the close of the 50-day moving averages, and the force index is negative. The force 13 is negative, but the 10-day pocket pivot is positive, and let's see if this brings up anything. Not many. Okay, you can see I'm updating right now. Okay, so this may not be a true bottom fish, but compared to where it was before, it is a bottom fish. And you can see what's happening on Liberty Media. This is Sirius XM. Here's your pocket pivot yesterday. The price, it opened higher and closed lower, but the volume was very heavy, and you can see that it's following through today. The Force 13, the Force 2 are turning positive. The long-term bongo never did turn negative. So this is a bottom fish pocket pivot. Let's look at the weekly chart. Oh, it's been lower, but anyway, that's a limitation of the filter. You just look at these visually. Let's look at Howard Hughes Holding. Now here's a true bottom fish on the daily chart, weak on the weekly chart too. But here's your pocket pivots, or you're starting to see buying coming in. Well, we had a visitor and my dog started barking. Sorry about that. Anyway, she's still barking, but downstairs you can see there are pocket pivots here on a bottom fish on these. So a lot of times you can catch these stocks when they're just starting to move, but you need to be careful too, because the trend is down and they may or may not reverse. I want to point out here on the ERG, look how much red there is in these stocks. EPS rank of 3, RS of 23, group rank of 17, ERG of 43. A lot of red. Here's a decent one, BJ's Restaurant, as far as ERG. And you can see it's a much healthier stock, although it's just in a trading range here. But here's your pocket pivot. And the 2-day force turned blue. The 13 is not yet, but there was a big move in the Kahuna, and the bongos both turned positive. Okay, let's move on. So those are the pocket pivots. I'm going to quickly run through some of these. These are scans that I created a while back, and they work pretty well. I mean, they're not perfect by any means, but what it looks for are stocks that are undercutting 3 below the 6. That's why I put that 3 below the 6 chart in here, and some other charts. This is fan is up, which means the stocks, the 18, the 200, the 100, the 50, and the 18-day exponential moving averages, which I use, those are all stacked. That creates a fan. So these are stocks that are pulling back with the fan up. Now let's look at the intraday here. And these columns tell you the days since the pullback. 4 days ago, this went down. The 3 went down below the 6, and the VPOC turned positive yesterday, or the volume point of control. Now, these are things that I use in my files, but they're in here because I developed the undercut and rally, and this is the best thing I came up with, and it seems to work pretty well. So you can see Academy Sports and Outdoor. Now let's go to a different chart here. I put these undercut and rally charts in here, and using Gill's colors, you can see that these were undercut. The fan is still up on here, 200, 100, the 50, and the 18, but the 3 went down below the 6 on this histogram, so it was undercut, and now these are starting to rally. You can see the blue bars, the light blue bars are either a VPA flag, which you can see here, or a bullish candle. So that's how I put the filters together to determine if they're getting some buying support. So these are 3 under the 6, and I'll just show you how complicated this filter is. All of these, if any of these statements are true, then you're going to get, it's going to pass the scan. So these are undercutting, and if they're moving up intraday, then they're starting to rally. Let's look at another one. Here's one sub 15%. So it undercut, and you can see that it's rallying today. There's VPA flags here on both of these. So here's the undercut. It rallied a couple days here, but it's starting to rally again. That's an inexpensive stock. My quotes are updating is what's happening right now. Cheesecake Factory just moved to the top of the list. It's up 4.31% today, trading near the top of its range. And volume's a little bit lighter. Here's the percent change compared to the low. Okay, let's take a look at this one. Now, here it is, Cheesecake Factory. Here's the undercut right here, and here is the rally. A lot of congestion around here, though. So, anyway, there are several of them in here. I'm not going to go through all of these. Here's undercut, end of day and intraday. Here's where the 3 cross the 6. Both end of day and intraday. And let's just look at Marvel Technologies. You can see that it's crossed over, the 3 crossed the 6, and it's on the way up. This was the undercut. Notice how the accumulation was taking place here, and it took off. Same thing here. Here it moved up, but kind of failed. But these work pretty well. Nothing's perfect. Okay, these all require that fan up. These require no fan, or no fan is required, I should say. So this can find stocks that, let's look for some crossover here with no fan intraday. Here's Semtech using these charts. So there was no fan because the 200's up here, the red bar, but look at this. It was under accumulation and it took off. Okay, so those are my creation. I put them under Gill's undercut and rally because he came up with this concept and I did the best I could on them. Now here's some potential bearish trades. And you can see that on the intraday these are still going down, and the reverse chart, well, this is a strong stock, but it's going down here. If you want to look at the bearish setups, you can do that here with these charts. And these are up here under Gill's name in folder number 1. All of his standard charts are down below this. Okay, so those are the undercut and rally, both long and short. And then volume dry up. Let me go back to a different chart here. I'll just go to my standard chart. Now, volume dry up, what I did here is volume dry up, end of day, price up, volume down. Volume, this is the intraday. So the volume was drying up, the price was up, but the volume was down. And then here's the end of day. Let's see what I have in the filter here. Both of these, you're going to have to go in and change that to no if you just want stocks. Okay, it's updating again. So the volume dried up compared to the prior days. If you look at these columns over here, the volume change from the prior day is negative, and from 2 days ago, sometimes positive, sometimes negative. But Signet Jewelers here, volume was down at the end of day, 47.5 from the prior day and 14.7 from 2 days before that. So let's get this out of the way. And you can see that the volume was down yesterday compared to these prior 2 days. So the volume dried up, but the price was going up. Now here's the intraday version of this. Sun run. The price was down. Well, it was about flat yesterday, and then from 2 days ago, it was down. If you look down here, you can see these volume bars. And today, it's on the move. So there was a volume dry up, but the price was going up. Okay, on these, volume, this was the end of the day, price down and volume down. You can go through and look at these yourself. This video is getting pretty long, so I want to get out here. There's just self-explanatory. Price down, volume down. But if you go to the end of the day, it's going to show you the ones that are moving up. Okay, number 3 is volume, price up, volume down, and the force index are these two, number 3. So what I did here is I had a negative force index also on the 2-day force. This is just something I came up with. Let's see if I can find one where it's still like right here. So the price was up, but the volume was down, and the force index is negative on the 2-day force. And if you click on the intraday, you can see the ones that are coming out of this. Here's JKS. You can see it's went from red to blue today because the force index 2-day turned positive, but the volume dried up compared to the prior days. And this one, just different. Volume dry up, end of day, price down, volume down, negative force index. And you can see the force index columns are right here. I didn't point that out. So force was negative on the 2-day, and here's what's happening with them today. Let's look at coals. Volume was drying up, and the force was negative, but now the force is positive as buyers come back in. So that's it. That's what I've put together for you for the OWL scans. They're not perfect. Nothing is. But these are going to give you plenty of opportunities. Let's do one more thing here. I'm going to go into the intraday scans. These are the most active up, most active down, high relative volume intraday, high relative volume negative, leaders up intraday on volume. These are stocks that are leaders based upon the fan. It has to be up, and these are up on volume. And these are the leaders where the fan is up, but they're down today. So let's look at DraftKings. You can see it's a leader, but it's down today. And then this is a volume surge. You can figure out these filters yourself. Now, I didn't do the ETF and the common stock in here. You could insert them if you want to, but here is a percent volume to the 50-day volume. 50-day moving average volume is greater. It's 130% above normal. And you can see the volume right here. Big volume surges up and down. Now I'm going to extend this just a little bit. I want to show you one thing. If you're just putting Gill's files in, I've deleted all of the user smart groups except for 2. And if you have a bunch of user smart groups and you want to get rid of them, just click on this. You can go in here and just click on delete and then install this installation file, and you're going to only end up with 2. Now, I have money flow in from last night, and these money flow scans do one thing. The money flow in, I'm not taking the industry group into account, but they have to be positive, and they have to be at least 50% of their daily range and above the 90-day moving average volume to be a money flow in stock, and it's just the reverse for a money flow out. So I'm currently in volume surge, stocks up. You can see that that's a filter that's applied, and these stocks, if I click through to the warehouse, you can see that I'm in money flow in right now, and these stocks are showing up in money flow in yesterday, and they are continuing up today. Now, this is the volume surge up that I'm using. But you can take this smart group, the money flow in or money flow out, and you can apply any of the views. And let's just go into the OWL handbook, and let's look for a 10-day pocket pivot intraday. And these were showing up in this money flow smart group. If I go back to the smart group and I take all the filters off, this is updating again. That's why the hourglass comes up. Anyway, you can see there are 288 stocks that were positive money flow yesterday based upon my criteria, and there were 419 that were negative money flow. So these work pretty well to keep you on top of what's happening with money flow. And now this one is money flow pocket pivots, where these requirements on the 90-day moving average volume were not met, but there were pocket pivots. The other criteria were met, but without the 90-day volume requirement. So these, if I click through to this, let's see if that's true. Okay, here's your pocket pivot, but see, it didn't get above this is a 50-day moving average. I usually use a 90 because the VPA flags are built on it. But the volume wasn't enough to trigger money flow in. But by using the pocket pivot money flow, these all had pocket pivots yesterday and flowed in and flowed out. And you can see a lot of them that flowed out yesterday, they are up today. All kinds of, here's the money flowing out, but here it's up today. So you can look for 10-day pocket pivots intraday, both on the money flow in and out. So there were 60 yesterday where it flowed out with the pocket pivot volume, but now they're coming back in. Okay, I've got one more thing and then we're done. I also put these in here. A lot of you like to look at large cap, mid cap, small cap, or micro cap. These are updated every day. So these are stocks that are large cap stocks. And if I apply the filter right here, you can see that 36 of these had the pocket pivots yesterday, and this is what's happening with them intraday. Large cap, mid cap, and so on. But I find these very useful if you want to limit what you're looking at as far as capitalization. If you only like to work with large cap stocks, just come in here and apply this, and it cuts it down for you. Anyway, that's it. I went over longer than I should have, but I wanted to get all this in. If you have questions, you can contact me, but hopefully this is a good explanation. And just play with these other filters. They're all pretty self-explanatory. The code red and code blue, it's all pretty self-explanatory. Code blue, 2-day trigger on the force indexes. Here's the force index column right here. That's all I have time for today. Good luck and good trading.